Success is 99% failure. Soichiro Honda. And what Mr. Honda means is that when you learn from your failure, you are able to succeed. That is why it is so important that you practice, that you follow these charts 10 to 15 minutes a day. That is all we ask. But it is the hardest thing for people to do, to stick with it. And if you stick with it, you will get this. And again, appreciate all of our Patreon supporters. Great Patreon training yesterday. Hope that you got that. Email we sent you if you want to become a Patreon supporter and join in that monthly live question and answer session and immediately receive our 3-part training options made simple. Join at any of the 3 levels and you'll be getting it. Depending on the level, you can get a copy free of our book also. But again, we so appreciate you Patreon members. And of course, we appreciate all of you being with us, our book buyers, and just the folks that are loyal and tune in every day. It's all about you. Let's jump into these charts. We see stocks are up. Bonds and gold are down. How do we see this week shaping up? Well, as we see things continue to move along the cues as we hone into the weekly chart, the blue signal line still just barely there above the red signal line. We look at this prior weekly high. It was 314.60. Oh, you know what I'm doing? I'm going to the wrong chart first. Let's go to the S&P 500. We'll come back to the cues. Let's look at the S&P up 1.49%. Now the high this week, 379.90. The high last week, 374.66. We're reaching a higher high. Candlestick itself is up. We do need to find a better trend line here. When I say better, I just mean the one that's tracking our up movement. There we go. That's a little better. See the price percent oscillator pulling away from this red signal line. Same thing we see, although more close to being laminated on the NASDAQ 100. We see the derivative oscillator gaining upward momentum. Like I said, it was an up day. What do we see on the 2-day chart? Well, it was heading down. Now it's trying to head up. And of course, it's the first day of the latest 2-day candle. It will finish drawing tomorrow. Could it be a 2-day recross going up? Could be. We'll wait and see. Again, pay close attention at 350 tomorrow. You might have a 2-day recross going up. Now, it's up to you what to do with that information. But that is sure something for you to look at on a good practice trade. We see the half-day chart up in the morning, further up in the afternoon. Price just continuing to move up. Let's see if we can update our trend line and get something a little more helpful. There we go. So again, nice action over the last 2.5 days. So again, we'll keep our eye on the prize. Now, the NASDAQ 100 flying up 2.42%. What do we see going on there? Like we said, well, let's look at it. 215.84 is the high this week. 315 rather. 314, so we are higher high. It is a smaller candle. Does have a wick on the bottom, but it is moving up. We see again closely delaminated, but that blue is on the side, on the high side of the red signal line. Derivative oscillator gaining upward momentum. 2-day chart. Again, it was flipped over negative, pulling us out of that trade. Could it be taking us back into it? Don't know. We'll wait and see. Keep an eye on the price. You might have a 2-day recross going up on the cues also. So it's further away than the S&P. So we'll wait and see what that shows us. About the half-day chart crossed over going up in the afternoon. So we'll take and move our trend line over and try to connect something for ourselves. There we go. And we'll see how things progress on Friday. Let's go to from stocks to bonds. What do we see in bonds? Well, we see a down candle for the week. Price percent oscillator pushing over. Like we said, bonds down for the day, 0.80%. And again, red down candle, wick on the bottom, derivative oscillator, price percent oscillator heading down. 2-day chart. First day of the latest 2-day candle, lower low, big red down candle. And we see that 2-day chart, it already crossed over. Our crossover got dragged a little to the wrong way, but there we go. Now we can see it as things continue to spike down, and we go from, and you know what, we tried setting ourselves up with a trend line. Let's make that trend line a little better, although you know what, since this candle's not drawn yet, that's going to move on us, but we'll fix it tomorrow. No big deal. It's where we are on the 2-day. What about the half day? See down movement in the morning and a slowdown in that movement in the afternoon. That's why it was only down 0.88%. Could have been a little lower. So again, we'll continue to watch, pay attention to what is going on as we see things continuing to move down. Remember what we said yesterday about that 2-day recross? Some of you jumped into that on TBF. What is TBF? Tango, Bravo, Foxtrot. It is the inverse fund of TLT. Just a little bit of sophistication there for you that want to ride things up when the ETF is going down. Most of our funds, three of the four, the S&P, SH, QQQ, PSQ, and TLT, TBF, they all have inverse funds that are fairly liquid that you can get in and deal with. Not so with gold, which is where we're going to next. And let's jump from bonds to gold, down 0.22%. And of course, gold peaked, and let's go to the weekly chart. Gold peaked, as we can see, this week, the recent highest high, booming up to 183.21. And again, blew off some of that steam today, but a nice big green up candle. Not enough yet. We were so much closer earlier in the week, weren't we, to a crossover? Not there yet. We do have a green up candle, but not a crossover. It doesn't look like this week. We can see, well, let's just make sure we can see the derivative oscillator losing downward momentum, price percent oscillators heading up, but still negative. Go to the 2-day. We look at that 2-day chart, and again, we have a red down candle forming after things peaked back on Monday, and then sort of blowing off that steam and losing that energy. Derivative oscillator losing momentum, price percent oscillator flattening, but still headed up. Go to the half-day chart. What do we see? The real down, strong down movement was on the, let's see, we look at it on the morning of Wednesday, and then followed up with some down movement in the afternoon and just sort of continuing on Thursday. So we'll see how gold continues to shape up. Isn't it interesting how things can change over a week? That's why we pay attention to our big charts, and we don't get lulled into thinking those little charts are going to make the big decisions. They don't. The big charts make the big decisions. That's where we are, folks, as we end the day. Oh, let's check out silver. Is silver going to make it on a crossover by the end of the week? It might. Keep your eye on the price. Watch for silver tomorrow. Check it out tomorrow afternoon around 3:50. Might give you a buy point for a practice trade. Remember, we're not a stock calling service. We're an education firm. Want you to be with us every single day, practice trading like a maniac until you learn this stuff. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.